Good morning, everyone. Welcome to the European crossover webinar. Sorry for the delay. Hooking up my mic and I actually hit the restart button and ended up restarting the computer. Then the stupid dog wants to go out, so I had to rush downstairs to let him out. Hang on one moment. And you can see we're actually gone and added a little bit further on to the gains here in the euro dollar. And we'll also take a quick look here. Bear with me. Irina says, good morning. Good morning, Irina. Everything is going just fine until when I hook up the microphone, or whatever you want to call it. It's right close to where the reset button is. So I accidentally hit the reset button and shut off the computer. But anyway, let me go on and jump into the equities quickly. So I had to hurry up and get everything started. It takes a while to get things restarted. So let's go over here. So you can see we've already had a pretty good little run here in equities. I was up late watching the news, and I know that Biden's real close, but they still have to get the figures, and I guess that's why the market even added on. I mean, when I went to sleep, I think it was right around here anyway, so we've even added on further to those gains. Looking at the NASDAQ here, you can see here on the 2-hour chart here, they pretty much similar move we have in the S&Ps here. And just a quick look, see, don't pay too much attention to gold, and we are pushing a little bit higher. But certainly, like I said, things have turned around. I mean, we continue to go on and push. I can see here we got to 78%, and we're still pushing beyond that. And I left this here, but I didn't give it too much thought, even when it was got to that level. As if you look here, when we got to the 61%, we saw a pretty good reaction. So generally, you're not going to see it go one level up and see another reaction. So it's continuing to go on and press in that direction. And let's go on and even had to hurry up and get the Reuters feed up. And holy smokes, let me get the economic data up. I don't know why it's taking so long. What the heck? Well, I'd have to restart it then. When I went to it, it's not populating for me. Hold on. Oh. I'm not saying whether there's a connection error. Well, let me go and pull up the news. I did pop up the news. Okay, so sterling above 130 on dollar weakness. The sterling erased early losses to break above $1.30 on Thursday on broad-based dollar weakness, though gains were limited by the Bank of England's plans to ramp up bond purchases after cutting economic growth forecasts. The British pound was up 0.3 at 30.19 in early London trading after falling 0.2 at Asian trading against the euro. It strengthened marginally to 90.39 pence. The Bank of England increased its already huge bond buying stimulus on Thursday by a further £150 billion as it sought to cushion Britain's struggling economy against a hit from a second coronavirus lockdown. The bank said it expects Britain's economy to shrink 11% this year compared with 9.5% contraction forecast in August. The pound lost ground overnight on media reports that the Bank of England is considering moving into negative rates. And the Australian and New Zealand dollars are shunted by US dollar vote jitters. The Australian and New Zealand dollars were shackled by heightened uncertainty over the outcome of a knife-edge U.S. election, with Thursday's trade characterized by nervousness as investors brace for a potentially drawn-out counting process. Although the election still remains very tight in key swing states, Democrat Joe Biden has managed to edge closer to the White House, prompting Trump to open a multi-pronged attack on vote counts in several states by pursuing lawsuit and a recount. It's ridiculous, really pathetic. The Australian dollar traded at 71.75 after closing at 71.78 on Wednesday. New Zealand dollar was slightly lower at 67.01. Until we have a clear win, and this may take until Friday, we should expect markets to be volatile. A contested outcome would drag this volatility for as long as we have a clear result, said Rebecca analyst Fabiano Fedeli. Republicans look likely to retain control. The Senate can use that to stymie Biden's fiscal policy agenda in the event he wins the race, adding another complicating factor for currency traders. In short term, until certainty on the outcome continues, we can expect investors to turn from more defensive and into one of those blue sweep trades are likely to unravel. She expects the unwinding to concur in emerging market equities and currencies, including China, the renewables theme, and cyclicals. We are likely to see some relief in the red tide trades, such as oil, or Russia, which is a country that is expected to incur sanctions under a Biden administration. This, however, could be a very short-term trade and in place until we have some clarity on the win. And the dollar near Dollar near 1 week lows before U.S. election results, and yuan soars. The dollar held near a 1 week low against its rivals on Thursday as investors unwound some of the safe haven demand for the greenback as the presidential election entered its final stretch. Democrat Joe Biden is predicted U.S. election when our president Donald Trump after pivotal victories in Michigan and Wisconsin, but this party is falling short of expectations in congressional elections, with the Senate looking increasingly likely to stay in Republican hands, making it hard to implement stimulus. But financial markets were braced for days or even weeks of uncertainty as Trump has opened a multi-pronged attack. We saw that part. The dollar will probably be caught between a haven bid on the uncertainty of the disputed election and a lack of interest in shorting the currency on the prospect of a potential Biden win. Dollar index is against a basket of six major currencies, was at 93.23. The euro about 17.60 on Thursday, and the euro was flying around in the last couple of days, to and fro, but in the end, it does seem like the euro tends to be stronger under a Biden scenario. Yeah, let's get ready to do the analysis. And click on that Reuters feed, see if it'll pop back up the. There we go. Okay, coming into today. Well, we saw that Bank of England did their bit a little earlier, about a couple hours earlier. And then at the top of the hour, well, at the bottom of the hour, we do get market PMI. That'll be construction PMI out of the UK. It's expected to be 55. Retail sales out of the Eurozone. That's expected to be down 1%. And we do get challenger layoffs, initial jobless claims. Now, challenger layoffs are going to be at 7:30 Eastern, with jobless claims at 8:30 Eastern. And we do have FOMC today. That could be interesting. One of the things I saw was that what they were saying is, now that, and we did see that part, well, I referenced it in the story about Democrats were expected to take over the Senate. They're not going to. There's a potential for a runoff, but that would be in January for 2 seats in Georgia. But for the most part, they did not take over. And so had they have taken over and Biden were to win, we were expecting a pretty big stimulus package. That may not be the case now, or actually won't be the case now. We could still see things move that direction, but I saw what they were referencing is that the Fed was expecting, the market to be able to hand the baton and let, this legislatively them help out with the stimulus. And so the Fed may feel they have more weight on their shoulders to react. Although I don't think that's going to be something that would react on today's FOMC. So all things being equal, I don't think it makes a difference for this one, but certainly going to make a difference going forward because it won't be a big stimulus package for sure. Let me move this out of the way. Brock says that if Biden wins, that Kamala could be important as a tiebreaker. That's true, but I'm saying is you need to be, if they had been in control, then you could really push for a big stimulus. So I think, like when you're looking here, like, well, why the heck is the indices up? I think they are up because once again, it was better if Biden wins, and I know he's knocking on the door, but knocking on the door isn't there yet, but it's pretty close. So I think that's the reason why we've extended this further. But I think had it been the other way around, we probably could have really taken off. But anyway, let's go on and move into the analysis. I need to even turn on my Squawk service. It was such a rush trying to turn everything up back on. Hang on a moment. Okay. So now let's go on and kick on the old bias chart. And let's go on and get started. So this is pretty good. Obviously we popped up here with a pretty good little move back, but we've added on to those gains. So let's take a look where we stand here for the euro dollar. So the euro posted a hammer. You can see that right here, tagging near the 1593 area. You can see that just about made it there before rallying back to close above 17 even. Resistance will be 1760. Well, we're right there right now. So we're 1764 with support at 1684. So, like I said, bringing everything up. So we said 1760 and 1684. It's still bearish. Now, if we close up here, well, actually, we have to close above 1787 to go back to bullish. Because if we stay in this area, really it's just kind of be in a range. Now, it doesn't seem like that considering the pullback here, but we'd have to stay above 1732. But if you slide back down here, we're still bearish. So I'm going to keep that bearish for now. And let's go and move on to the cable. So cable range was 129 to nearly 3151. Boy, was that a range. You know, look at that, almost 129 to almost 3151. While closing lower from the prior session. Resistance on Thursday will be 3087 with support at 2896. Well, Bank of England weighed a little bit on this, but we're coming back anyway because the dollar's weakening. So once again, resistance is going to be 3087. Was supported 2896. This probably isn't going to get tagged down here. This 2896, but obviously the Bank of England had a little bit to do with that. Let's go move into the Aussie dollar. Well, it's a pretty good little move. So the Aussie saw a turnaround on Monday after nearly tagging bias chart support. Oh, doggone it. It ticks me off. It didn't update. So looking at the Aussie for resistance, and obviously we saw a pretty good rebound here. And I know I put the analysis there because I remember I was thinking, wow, Kiwi's pretty much the same thing. But anyway, that being said, resistance for today would actually be right there. These two wicks come across, which were right there, 7208. So 7208. Now with the Fed and also the dollar's under some pressure, doesn't mean we can't hang around at these upper levels. But that's what I have the resistance right now, 7208, with support coming across the bodies right there. See that? That would be 7133. And moving on to the Kiwi. So the Kiwi posted a wide range on Tuesday with the pair closing near 67 cents. I don't know why I'm saying Tuesday. Doesn't make any sense. But anyway, resistance on Thursday will be 67.34. So maybe the Aussie was correct, and I just got ticked off because once again to Tuesday. Resistance on Thursday will be 67.34 with support at 66.46. So bear with me. So once again, that's 66.46 and 67.34. Moving on to the dollar CAD. So the dollar CAD close. I don't know why this is not updating. It ticks me off. What the heck? Well, you saw the wide range here, and you can see here we tagged nearly 33 cents, falling all the way back here. Support would be this wick right there. That would be support. and that would be 30.79. And resistance is going to be that wick right, this body right there, which would be 32.11. And obviously it's still bearish. And going into the peso. So the peso saw a far-reaching range up to near 22 cents. Support on Tuesday will be 20.84. Well, not that far away from it. We're just about there, with resistance at 21.23. So 20.84. And 21.23. Yeah, these ranges are something else. Look at that. All the way up to nearly 22 cents. And look, right now we're right there, just about there at the 20.84. Holy smokes. Let's go and move into the dollar yen. So the dollar yen rallied to just above 525 before reversing 100 pips. Resistance will be 487 with support at 412. And still retains its bearish stance. Onto the cash dollar index. So the dollar index had a wide range, closing below 93.50. Support on Thursday will be 93.02 with resistance at 93.87. And let's go and move into the cross rates. Just like so many of the other pairs, you look at this wide range here. So resistance is going to be this wick right here. So you can see before they make a push up here, they'd be selling. But if we can get just above that, this level here, but that's not going to be resistance. It's going to be right there with that wick. And that would be 70.26. And support, let's just go right here with this level, which is a 69.54. Right across the board. And on to the euro pound. This is interesting. Oh, because the Bank of England. I'm saying, wow, that's kind of weird. Jumps up and so that being said, resistance, we do have this 90.56, but once again, you always push a little bit higher to get some stops. Can we find something like we have some touches here? Not even here. That doesn't, well, you see all these touches here in the body. You see right here, that's about as close as you can get, and that's that wick there and close to this one here. So let's go with that body here, and that would be 90.78. It's already fading. Support right there. the opening there of that body, which is 90.02. They actually almost made it there. And take a look here with the Euro odd. Once again, another wide range day, but we finished here near the lows. Obviously, because we've had such a good run with the Antipodians. So we're looking for support. Support's just going to be right there at that low from yesterday. That will be support. So 62.85. With resistance at this level right there. 64.10. And take a look at the Euro Kiwi. Decent wide range, not as wide, but decent here. Support's going to be just below the lows of 74.43. We'll go with this body right there, which would be 74.21. And resistance right here with this wick. It's probably about as close as we can get. Well, right here, this body there. So we'll go right there, which is just below yesterday's high, which would be 76.02. These markets have had some pretty wide ranges. This one doesn't seem as wide, but I mean, kind of throws a skew into everything is because they pushed it. But this range wasn't too wide. But once again, they're not going to get, once you make a move towards that level, you'll see people laying off some of those positions. Let's go move into the Aussie yen. Same thing here. You see how, get this. Hard to see this just all of a sudden pushing that high there. You would think that the resistance is going to be a little bit below there, but I'm not seeing anything that gives a good level. So with that, we'll just go with the high from yesterday, which would be 75.45. And support, same thing here. I really don't see anything here. I guess we can go with this body right there. I don't think it'll drop back down there, but it would be 74.33. And let's go move into the guppy, which we do have construction. What is construction PMI? I think was coming out. Okay, you can see here we're pushing up against this resistance level 35.89. Generally, you'll see the stops taken out a little bit above. Same here. I don't see anything here that points. I think this is a little bit too close. That 36.12. We'll go with right there, 36.24. 36.24. And support's just going to be the level right there, 35.26. See that coming across. And we had that, and then on to sterling odd. Pretty good sell-offs, and then we gap lower and we start to push up higher. Support's just going to be that level. Just go with the levels, and it looks like that did provide support right there, which that level is 80.40. And resistance, let's just go with this body right there, which is 81.39. Oh, we're still pushing higher here. Look at that. Woo! We're now at 1774. Obviously, we've got this resistance level above at 1787, but it is above where our resistance was. So you'd want to look with 1787 as far as being a level right there. And they're pushing, so we can't ignore it. We'll just go and update it to the 1787. But things are a bit skewed with those runs we had from yesterday. Can you imagine anybody that was short from here? They're having to pay up. But it would be 1787. You can see the level coming across, and that's actually also the low on that wick. So let's just go on and update that to 1787. That would just be completely ignoring it. Doesn't make any sense to do something like that. Yeah, Arena says now it's 1769. Yeah, it's 1776 right now. We'll open it up again. Hang on. They are above it, but where's the resistance level? Like, where do we expect? Once again, when I do the bias chart, remember, although lots of times it does coincide that with that, this doesn't mean that's going to be the exact high, or it is resistance, but where I'm talking about resistance is where I expect buyers and sellers to have a battle. So obviously they did push, but once again, I think today's not weird, but it's strange because when I'm doing the bias chart, because we've had this wide range the day before, you're getting stops being blown out. You see that? Because anybody that said, oh, I'm shorting it here, this is a good short. Maybe I'll sell a little bit more. Oh my God, it's still rallying. So that's why you're going to see these outsized moves. So the next area right here is actually 1787. Generally, I don't like to update the bias chart, even if we're already kind of pressing there. But the thing is because of the ranges we saw yesterday, anybody that's short, they're being pushed out. I'll give you an example. Look over here, what I'm referring to. May not be as clear, but look. You see, look at the NASDAQ, okay? So anybody that stood in the way, and look, this is on a 30-minute, okay? Oh, this is a great level. I think I'll take a short here. Oh, this is pretty good. I'll short here. And look, it's just going higher and higher. You see what I'm saying? It's pushing higher and higher. Look at the 2-hour chart. You see here? Just pushing higher. I mean, we do have a level here, but the point is nothing's telling you that the market wants to reverse at this level. So anyone's in the way, they're just, like the old frog in the boiling water, they just keep moving it higher. So hence, let me go back to the euro dollar. That's what I said. The ranges we saw yesterday, when you're pushing higher, it's pushing these people, anyone that's short, they're getting stopped out. Now, it did make it because I was looking at 1769, I think, or 1764. But here, do they have a level that they can go to? Okay, so think of it this way. Here's one way to look at it. Let's say that you're short and you're like, oh man, it's still going higher. I mean, at what point should we at least slow down? That would be right there, 1787. So anybody that's long would say, oh, wow, it's doing great. I think I'll take a little bit off at 1787 against that level. That's what I'm saying. So that's the way we look at it, is in the resistance and bias chart resistance support. Doesn't mean that that's the exact high or low, not necessarily exact, but close to that high. Doesn't mean it's for that day, although lots of times it works out that way. What it means is, where's the level where I expect us for sellers at this point, if it's resistance, to come in? Where do I expect there to be a battle? Where is it, hey, if you get to this level, I'm selling against it. If you get to this level, I think I'm going to take some of my longs off. I'm bearish. If you get to this level, I think I'm willing to take the other side. and that would be as clear as day. You can see the 1787. So we'll see, but I think this is more about, you can see it hasn't ripped up. So Irina made a good point. She's like, well, hey, it's above resistance. And it was, because initially we were looking at the 1764, but look at this wide range. That's why today I'm having a tough time with the bias chart, because remember, I'm telling y'all, oh, I just don't see a good level here. Let me see, where could that resistance or support be? Because on a wide range like that, you got people stuck all over the place. So you can't say, oh, this one's going to be a pretty decent low or whatever. So you can see we went past the 1764, but are we taking off? Or like I like to say, like a marathon runner, are we blowing and going? No. I mean, we took out the stops, but we haven't even made it up to here. You see, so that is the logical level as far as where could they go and where would we see a fight, and that'd be 1787. So I don't like to update the bias chart right after I did it, like to form fit it and say, oh, now it's this. But you have to respect where it is and this big old range. So that's what I'm saying. You have to be careful today with these levels and take into consideration these wide, crazy ranges we're dealing with, because what normally would be like, oh, we'll see some resistance or whatever come in. You got people that if they came in and shorted here and here and here, they're well underwater. And so they're putting their stops just above the day's highs, and you can see they just got stopped out. But are we still moving higher? Not really. I mean, we've taken out the stops, and now we're higher, but we're quietly higher. We haven't even made it to this level, but this is an area where you would see a good stand. You can see all the touches coming across here. You see that? Which is how I like to do my resistance. All those touches. Look at that. Body, wick for the most part, wick. You see? Body, wick. You see? So, but they haven't even made it up there. So anyway, that being said, so we can see we saw a nice little rebound. You can see Amazon is even gapped up here at 33.05. But what I'll do is I do have another chart. So sometimes, because I knew yesterday was going to be kind of wacky, and look how NVIDIA, holy smokes. So what I've done is I do have one other chart where I just have it on the 30 minutes to see that. So, hey, Giuseppe, thanks. Let's go on and move into the 30-minute of basically the same charts. Make sure it's here. Yeah, it is. There we go. There. Okay, now we're seeing the after hours, pre-market hours, whatever you want to call it. So look at Apple. It's already moved up. The close was $14.95, and look at it. It's $18. Look at that, 118. And look at the Microsoft. Daily close was 216.39, and look, we're pressing 221. Well, actually 222, which is above yesterday's high range. So we're already above that. Look at Amazon. Holy smokes. And Google. And look at NVIDIA. Nice gap up here. Facebook. Holy smokes. So you really, they're knocking some people out of the box. I had not done anything, even though it went higher. I told y'all, I did not have a good election. The thing really ticks me off. You got to have a plan. I did not have a good election evening trading. My take was just get long, wherever you're going to get long, only trade long. And what the heck they do? It went higher. And then I got myself turned around. Then the market went lower. But then I bought. Then eventually it went a little bit lower. Then it went higher. Then I got myself turned around. It went down. I made some money on the downside. Then it turned around, went higher. So I did not, and I did say that in the chat room, I did not. I had a crappy election night. The thing that makes me mad is I even had the direction right. I didn't stick to my plan, and it ended up catching myself on the wrong way. That being said, it made me very cautious yesterday. So when I saw the moves that we saw, and I'm going to go back to the NASDAQ, Whereas before I might have said, oh, we're at a really good level here. Let me step in here. I did not do any of that. So I'm flat right now. And I mean, I'm glad I am in the sense that, look, it's moved higher. But yesterday, it wasn't like when we got to this level, we just kind of sat there. You see what I'm saying? You can see here when we got, you surely didn't want to be saying, let me buy it right now. But what have we done since then? We've continued to move higher. I mean, they are really testing people. Look at this. Oh my God, that just hurts. Look at that. It's just continually straight up. Yeah, you can see my little notations here, which, this thing trades really well on just plain old technicals if you're just patient and wait for the technicals. So it really ticked me off because I had this level from before. Okay. And I remember making some money, I think, when it went down to this level, if I remember correctly. But anyway, look at that. That was a nice hammer. And then I got a nice little hanging man, which it did dip a little bit, not much, but you can see what it did for the most part. Like I'm saying, we're sitting here not really doing anything, not doing anything. Finally, they break a little bit higher. If you're right here, and this is in Asia, they're just milking you. I mean, they are just running you out of town on the rail. So if you look in here, let's take a look on the 2-hour chart. Holy smokes, I'm getting a little bit better. Because like I said, I told you, it really ticked me off. I thought, be long, because I thought Biden was going to win, which it didn't happen. Didn't play out the way I thought. But the market traded that way. And I got myself turned around, and I shared that in the chat room. I did not have a good election. It's really my own fault. But that being said, maybe I would have tried to step in here, so whatever. But after that, thing that really ticked me off because look, technically, you saw it break out. So here's the breakout. We came back down. Where did they come back down to? The trend line. You see what I'm saying? We snapped back. We're talking about that. We had that hammer. And then look, the market keeps moving higher. Now, we did see this market ride at 61% and then sell off. So when I put this here, I go, you know what? I don't think that's going to stop the market when it gets there. I'll go and put it there, but I don't see it happening. Sure enough, it did. Look at that. We've just kept it moving higher. And I'm not really that much of a fan of the 88%. Look, once you get past that level, who knows what's going to happen at that point. So if you're looking at resistance, and we will look at the S&Ps, some of y'all prefer to trade the S&Ps. I like the NASDAQ because of the movement we see here. I guess right there, which comes in at 12,090. But at this point, what you do is you let the market tell you. That sounds all corny, like, oh, yeah, easier said than done, because you can see here, look. You see here? You could have notated that this was a hanging man. You see what I'm saying? And it did dip, so we're not going to say it didn't. But then once it got past these stops, look at that, it took off. And so once it takes off like that, you got to respect and say, how much further can it go before it exhausts itself? Well, you kind of saw that here a little bit, and it wasn't a key level, but you'd have to wait for it to break, and it never broke. So it's taking it another level, and they're basically just running over people at this point. How far can it go? Right here. Is 12,138 or really just a tad bit higher right there? 12,161. And I think what's happening, what's the problem right now is the Fed's today. And they're going to see what the Fed says. Even though I don't think it's going to make a heck of a bit of difference, you don't even want to stand in the way of this stuff. I'm just saying they're just eating people up alive. Let's go and move into the S&Ps. Essentially the same move, although the S&Ps are coming up to a good level here. So let's take a look at this one. That is 34.92. So if you're long, they may go and take some off right there. There we go. That's a good little level from the go-to, 34.92. You see that? Here's the low right there. Here's the high. Here's the body. And here's some bodies right there. So that 34.92 looks good. Could they push a little bit higher? You'd be looking at the wick here. You'd be looking at that body right there. So let's go on in there. And you see how that confluences with this wick here? That would be 3,500. But here's the deal. On a day with the Fed, and one of the things that they had talked about was they were hoping that they could have passed the baton to, the Senate, so to speak, to Biden. And I'm talking about the Fed. And so now the Fed's going to have to do some more heavy lifting. So I don't think it's something that they will address in this meeting, but I think they're going to try and find out what they say. Thing is, you don't want to stand in front of the Fed on a day today. I mean, it's just not the day to do it. I mean, if we come to this level, let the market do what it wants to do. And really, I mean, unless you're playing it for the long side, and it's pretty hard to play it long. I mean, we're not dipping too much. I prefer to sit back and wait and let the market do whatever it wants to do. And then we start to see some setups. You see what I'm saying? Like, you did get some setups on the election day. I didn't play it very well at all. But I'll give you an example here. So when the market ran out of gas, we're like, well, it just keeps going higher. So we saw this dip here, and you see, got like a medium-legged doji. Let's see what happens now. So now we rally back up, and you say, well, here's my resistance if it gets here. It doesn't make it. It falls again. Like, okay, now I'm starting to see something here. We see right here. You get this dip here. They come down, they close here, and we're rolling back. Okay, let's see how we get a reaction, because you're so far up. And remember, the market's rallied so far that the neck, you're just waiting for a good setup. So you still, at least from what I'm seeing, you're not seeing anything yet here. And the market pulls back. So to me, just like the market's like, it's going back and forth. We're not seeing anything. Look at this. You get a move, a dark cloud here, not a dark cloud, but a dark body, and we turn around and come right back up. Then we turn around and give it right back up. So you're starting to see the market, kind of swing back and forth where it won't take much to nudge it. Right here, once you break this level, look, you see how you break this level, that body? Then you can see, oh, well, yeah, a big deal. But you see here, we broke it. That would have triggered some stops. And look, don't buy anything, because let's see how far they can press it. And you can see they really came under some pressure. On the rally back, then you look for the wick here and the body. And you can see here, they made it up to the wick. They came down. They made it back up to the wick, and they were pressing up against the body. They triggered some stops. But look, we closed with that same thing, something like a medium-legged doji. We take another dip, one more rally back up to the body, and then we really clean some people out. So my point being is, let's wait for some setups. Don't try and be Superman or whoever and stand in front of the train. I've had my share of that stuff, and you definitely don't want to do it on an FOMC day. So I hope that helps. With that, I'll see you in the chat room, and thanks for joining us here on the European Crossover webinar.